Hello students, welcome back to the departmental accounts. Students, today we are going to solve some three problems in case of departmental accounts. So this is the 12th question that we are supposed to solve in departmental accounts. From the following balance of Ravi, prepare a departmental trading and PL account for the year ended 31/12/18 after adjusting unrealized profit. So we have two departments, department A, B. We have opening stock, purchases and sales. General expenses incurred for both the departments were rupees 75,000. Other information: closing stock of department A was 27,000, which includes goods received from department B for rupees 9,000. Closing stock of department B was 30,000, includes goods received from department A 8,000. Opening stock of department A and department B 3,000, 2,000 received from department B and department A respectively. The gross profit is uniform from year to year. From the following balances of Ravi, prepare departmental trading and PL account for the year ended December 18 after adjusting unrealized profit. Unrealized profit means, students, we call stock reserve. So what is unrealized profit? Profit included in the amount of transfer from one department to another department. So when one department transfer goods to another department, which includes profit, then such profit is called unrealized profit. See students, department A and B both belongs to same business organization. So one department cannot make profit by transferring the goods to another department. So therefore students, it's just like one brother earning profit from another brother. That profit is not real in nature, it's fictitious, imaginary. So that profit is called unrealized profit. It is called stock reserve, and that needs to be adjusted. Now we are opening stock of A, B, purchases, sales. General expenses incurred for both the departments were 75,000. So no information about the general expenses. So distribute general expenses in the ratio of 1:1, because no information regarding general expenses, how it has to be distributed. So distribute the general expenses equally. Other information: closing stock of department A was 27,000, which includes goods received from department B 9,000. So 9,000 is included in 27,000. So B has transferred the goods to A, and 9,000 is called the transfer amount of goods, which includes unrealized profit. So this unrealized profit in 9,000 needs to be adjusted, because clearly on the top they mention after adjusting unrealized profits. So department B have transferred the goods to A at profit. So that profit is included in 9,000. How much is a profit? You need to calculate GP percentage. That GP percentage will be the amount of profit. Closing stock of department B was 30,000, which includes goods received from department A 8,000. So opening stock of AB given, closing stock of AB given in the adjustment. So closing stock of B was 30,000. In that 30,000, 8,000 is amount of goods transferred from A to B. So A have transferred the goods to B at invoice price, which includes profit. So profit needs to be adjusted from 8,000. Percentage of profit will be from GP. Similarly, opening stock of Department A and Department B rupees 3,000, 2,000 received from Department B and Department A respectively. It means opening stock of Department A is 3,000 received from B. You need to go respectively in the order. Opening stock of Department A rupees 3,000 received from Department B. Next, opening stock of Department B 2,000 received from Department A. So this is the transferred amount of stock included in opening stock. So you need to adjust unrealized profit. The GP is uniform from year to year. Now let us go to the solution, students. So 13th question, students. It is similar to that of 12th, which we did just now. The following balances are extracted from the books of Vikram. You are required to prepare departmental trading account and PL account for the year ending 31/12/18 after adjusting unrealized departmental profit if needed. Unrealized profit is nothing but stock reserve. So we have opening stock of AB, purchases of AB, sales of AB. General expenses incurred for both the departments were 1,25,000 and you are supplied with the following information. So students, distribute general expenses in the ratio of equal. That's 1:1. Distribute it equally because no information is given. Closing stock of Department A 1 lakh rupees including goods received from Department B for rupees 20,000 at cost of Department A. So that means 20,000 is a closing stock of Department A received from Department B. Though they have given the word at cost, we need to calculate unrealized profit because on the top introduction they are asking you to adjust unrealized profit if any. So taking this as a cue, taking this as a assumption, we calculate unrealized profit. That's called stock reserve. So 20,000, I repeat, 20,000 should be adjusted regarding unrealized profit. Closing stock of Department B 2 lakh including goods received from Department A for rupees 30,000 at cost of Department B. So B's closing stock is 2 lakh. In that 30,000 is received from A. So calculate stock reserve for Department B on 30,000. Then opening stock of Department A and B includes goods of the value rupees 10,000 and 15,000 taken from Department B and A respectively at cost of the transfer department. So the GP is uniform from year to year. Students, it is a very similar problem. So kindly work it out. Here the answer, students. Same opening stock, purchases, sales, closing stock, you get GP. Then calculate GP percentage. Formula, GP amount divided by sales into 100, you get 40% and 50%. Bring down the GP. Transfer the general expenses should be distributed equally. Then stock reserve, you need to record in opposite side. Opening stock comes in debit. Stock reserve comes in credit. Closing stock comes in credit. Similarly, its opening stock reserve comes in debit. So stock reserve of opening stock is 10,000 and 15,000. Calculate at opposite percentage, ulta percentage. Stock reserve in case of closing stock, you get 20,000 and 30,000. Calculate at ulta percentage, you get net profit. So students, kindly try this problem. So students, let us work out the 14th problem today. Dr.JaiGanesh, who is running a departmental store, has supplied you with the following ledger balance. Prepare PL account and the balance sheet for the year ended 31/12/18. So we have opening stock 2000 and 4000, purchases of A 10,000 and B 16,000. However, they have given you the materials purchased in terms of kgs. A have purchased for 6,000 kgs, B have purchased for 18,000 kg. So why they have given you the quantity of material purchased is in order to find out the purchase ratio. So here itself you can get the purchase ratio, students. 6 ones are, 6 threes are. So the purchase ratio is 1:3. If kg is not given, you can take amount as ratio. If kgs are given, then you need to take kgs as ratio. Purchases A 6,000 kg, B purchases 18,000 kg. So simplify, 6 ones are 6, 6 threes are 18. So therefore the purchase ratio will be 1:3. Wages given separately, sales given separately. Rent and tax, students, you need to distribute on the basis of space occupied given in adjustment. Salary distribute in sales ratio. Student sales ratio will be 2:3. 20,000 and 30,000, 2:3. Carriage inward to be distributed in purchase ratio. It's a transport expense on goods purchased. Advertisement expenses to be distributed on the basis of sales ratio. Discount in bracket credit means it is called discount received to be distributed in purchase ratio. Furniture and fixtures will come in balance sheet, debtor balance sheet, investment balance sheet, creditor balance sheet, capital balance sheet, drawings balance sheet, bank and cash is an asset will come in balance sheet. Now let us look into adjustment, students. Prepare departmental trading account and PL account for the year ended December 18 and the balance sheet after taking into consideration the following adjustments. The closing stock on 31/12/18. A's closing stock 2000, B's closing stock 4000. So it will come in trading account and balance sheet. Internal transfer of goods from A to B 200 at cost. Since the word at cost is given, you need not calculate unrealized profit. But in the previous problem we calculated, because specifically they asked you to calculate adjust unrealized profit if any. So here in this question there is no unrealized profit, there is no stock reserve. So internal transfer of goods from A to B 200. So A is a giver, B is a receiver. So B debit, A credit. A giver, B receiver. So B department debit, A department credit. Services rendered by department B to A included in wages of rupees 40. So 40 is a services given by B to A. B is a giver, A is a receiver. So for B it will be credit, for A it will be debit. Space occupied by department A 200 square feet and B 400 square feet. So this is an information that it will help you to distribute the rent 1:2. That is 2 ones are 2, 2 twos are 4. So rent should be distributed in 1:2. Other expenses, other incomes and expenses should be appropriated on the basis which you think most. That means, as we discussed, advertisement, salary, all this should be distributed in sales ratio. Carriage inward should be distributed in purchase ratio. Discount received, which is an income, credit bracket is given, is an income to be distributed in purchase ratio. Let us work out the solutions. So opening stock take as it is, purchases take as it is, wages take as it is. CIW stands for carriage inward. The carriage inward in the question, students, it's 480. Distribute in purchase ratio 1:3. So if we should distribute 480 into 1:3, you get 120, 360. Next, wages, that is services rendered by B to A. As I explained you in the adjustment, B is a giver, A is a receiver. So A receiver debit, B giver credit. So A 40 debit, B 40 credit. Next we have transfer of goods from A to B. B is a receiver debit 200, A is a receiver, sorry students, B is a receiver 200 debit, A is a giver credit the giver 200. So for A it comes in credit, for B it comes in debit. Then sales as it is you take in the question. Transfer I have said, receiving department debit, giving department credit. Similarly services 40, then closing stock, total the trading account, you get GP. Bring down the GP, discount received 360 to be distributed in purchase ratio because you receive discount at the time of purchase. So 360 into 1:3. Rent distributed in space occupied 1:2. Salary advertisement distributed in sales ratio, and then you get net profit. Coming to balance sheet students. So capital 16,000 contributed by the proprietor. Add net profit 16,880. Total net profit 16,880 of A and B together. Less drawings amount drawn for personal use. Outer column 32,480. Creditor is a liability 800. Take all assets, furniture, data, investment, bank, and closing stock of both the departments. A 2,000, B 4,000. So you get 6,000. So thus the balance sheet tallies. So students, kindly work out.